Welcome back. You're still tuned into Trading Hour. Deepak Ramaraju from Shriram AMC is joining us now to discuss market fundamentals. Deepak, good morning. Thank you so much for joining in. Well, we're talking on a day when large caps seem to be outperforming the mid caps and small caps. Do you think this is a trend that we'll continue to see now, that large caps will continue to outperform? September did see ebbing of flows in large cap mutual funds, but what are the trends suggesting now?
Hey, thanks for having me on the show, first of all. And definitely, yes, we are seeing some kind of outflow that had happened in the FIIs in the recent past, that because of the Chinese stimulus. So that actually impacted the underperformance of the large cap. But yes, now we can see some kind of reversal also possible because the Chinese stimulus is going to be kind of muted one to a large extent because it's going to be, there's no time bound there. So you can expect the markets to reverse to a certain extent because FI flows can come back to India in the medium term. So that's where it's kind of, we are seeing kind of outperformance coming. But yes, it's early days. We can't say that the large caps are consistently going to outperform in the longer run because the mid cap and small caps still are going to have some steam left. So that's what my consensus is on about
that. Deepak, hi. You track many, you manage many funds, aggressive hybrid, a flexi cap fund, ELSS tax saver fund, and some of the top holdings are common across these funds. You've got a Bharti Airtel, Sun Pharma, Trend, Bajaj Auto. These are stocks which are in the top 5, I think, across most of these funds. So what is the approach towards stock picking? Why have you selected these particular stocks? And, going ahead for the next 6 months, because we have general elections, crude has been a bit volatile considering what's happening in Middle East. We've got US presidential elections. What would the approach to investing being?
So we as a fund house is more of a quantamental fund house. So we run quant strategies around and then use fundamental overlay over and above the quant strategies. So that's why we see some kind of overlay of overlap of stocks between different funds. So the large caps typically have some overlaps in those names, and these are mostly driven by the quant strategies. And the sectors that we currently like are more driven by the autos and as well as the healthcare. These are the top 2 sectors where we are currently overweight about. So that's the reason you're seeing some kind of overlap of the stocks. So that's it. So
okay. And in the second half of the year, do you think the bias of the markets could be a little negative? Would it be positive given the factors like Q2 earnings have not started off on a great note? They've been okay, or at least even the pre-quarter updates that we've got through. We've got state elections. How would you balance these, risk factors going into the second half of the year?
So definitely, yes, the earnings is not going to be all that great in the second quarter. So we are seeing some kind of marginal improvement in the EBITDA margins or the margin levels out at the bottom line. You might see some kind of growth. The top line is seriously getting kind of a bit stressed as of now. That's something which is visible, especially in the kind of financials. You're seeing kind of stressness building up in the financial space. NBFCs are still better off compared to the banks, and the private sector banks are still better off compared to the public sector banks. So that's one, because we are seeing kind of pressure coming on the deposit side on the banking space. So that's another factor that we need to be watchful about. So that's going to impact on the growth of the banking space. And we are kind of underperforming on the banks as a whole, as a sector, and as well as if you look at the stock performance as well, we have been seeing the banking being kind of underperforming because of this. Yes, today we might have seen a bounce back in this space, but it's early days. We need to see a consistent growth in the deposit franchise has to improve for all these banks. So when the balance sheet gets balanced out, especially on the liability side as well. So until the growth happens on the liability side, they can't grow much on the asset side as well on the banking side. Now, that's on the banking space. But we are seeing a growth coming in the mid single-digit levels, especially in case of your auto ancillaries or auto sector, or for that matter, your materials, or for that matter, your IT sector is going to be in the mid single digits kind of a growth on the top line. But the bottom line seems to be better off because you're going to see some kind of improvements in the margins, and as well as the operational efficiency has been improving, especially on the bottom line. Especially that's going to reflect in the bottom line for these companies. So auto ancillaries, IT is relatively kind of early stages of recovery that we are seeing there. Yes, the risk is there from the elections, especially the US election, which as of now is kind of clearly between both the parties is not clear kind of majority until we see the outcome of the elections. So that's going to give more guidance on what's going to happen on the policies of the US side.
You know, the other trend that we're noticing right now, and this is very recent because DMart suggested in the results that there's a lot of online competition, and that's the reason why the growth hasn't been as strong as they had anticipated. Is this a trend that you think will continue to hurt the FMCG companies, and you would look at some QCom players or players with online presence, and that could take some time before there's a recovery back to offline or brick and mortar segment?
See, the brick and mortar still definitely is still facing some kind of headwinds there. So definitely it's going to be under pressure. The consumption theme is strong. So it's not that it's not consistently weak or something, but yes, the rural demand is yet to pick up in a big way. Until the rural demand picks up in a big way, you're not going to see that kind of growth coming in for this the brick and mortar kind of stores. The quick commerce, yes, because of the festive demand, we see some kind of uptick in volume, but it's not going to be sustainable in the longer run. So it's kind of early days of recovery that we are seeing, yes, on the rural demand. But you need to see a sustainable demand in the pickup in the rural demand. That's when this kind of stores performance will start going up. The same store sales will start picking up at that point of time. So we need to wait and watch for how the demand in the rural side is going to pick up over a period of time.
Indeed. Thank you very much for your perspective this morning. Get into a break. We'll come back with more on the market. Stay tuned.